About 2 years ago, I bought HelloFresh, and if we look at the chart, I bought it at around here for around 37 euros, and today the stock has fallen considerably, so that was kind of a mistake. And the question I'm raising here in this video: what did I do wrong? And second, what's next? Should I buy more? Should I sell, or should I hold the stock? So let's get into it. Let's look at some numbers, and I want to look at the revenue first. So what we can see here, and I have grayed out 2022 and 2023. So what we can see here is what I have seen 2 years ago, and the main thing that got me buying the stock was the rising revenue. So we saw a pretty good trend in the revenue rising. But when we look a little bit closer to the operating profit, let's magnify that, then we can see the operating profit was actually going down from 2022 to 2021 despite rising revenue. So that was a warning sign that I clearly overlooked, or that I didn't want to see back then. So let's see what happened in 2022. Revenue was still rising, so that part of the idea that held up, but the operating profit, that was again going down despite rising revenues. 2023 was even worse because the revenue was round about the same, but the operating profit again went down once more. So next up, I want to look at the margin, starting with the operating profit margin. And that's actually the same information like in this chart, because the operating profit margin is a ratio of the revenue and the operating profit. So let's look into it. Again, I grayed out 22 and 23. And I also have a separator, pre-pandemic and post-pandemic. So what we can see pre-pandemic, there was a really good trend in the operating profit margin because it was rising year over year. The company was making less and less losses, and in 2019 it was almost no loss. It was mere minus 1.4%. And then of course came the pandemic, which was a real booster to HelloFresh's business. And they had a really healthy operating profit margin of above 11%. And then in 21, it went down again. And this actually was a warning sign that I frankly overlooked. And my interpretation as of today is that in the pandemic, the business model of cook at home and we deliver the ingredients in just the right quantity was really good, especially in the beginning of the pandemic, when a lot of people were actually afraid, didn't want to go out, didn't want to go to the supermarket. Then this business model was just perfect for the time. And in 2021, the pandemic was still there, but people got used to it. People started getting vaccinations. People already had it once or two times, so there was less anxiety, less uncertainty, and less reason not to go to the supermarket. Let's see what happened in the consecutive years. Until today, the margin was falling more and more. So the question is, why did the margins fall? And looking at it from a financial perspective, let's first look at the gross profit margin. So here we have the gross profit margins, and as we can see, pre-pandemic the margins were improving, and post-pandemic the margins were stabilizing between 25 and 28%. So that looks pretty good for that company. Short explanation: what is this margin here? This is what's left over from the revenue after ingredients are paid and fulfillment is paid. So HelloFresh has bought the ingredients and shipped it to the customer, more or less the core business. And this looks good. So I looked into the income statement once again, and what I saw was that especially the marketing costs were rising. And what I have here in the gray bars is the amount of marketing expenses for each euro of revenue. Again, pre-pandemic, they started out with about a quarter for each euro of revenue, and improved in 2019, only 22 cents marketing expenses. And in 2022, they spent about the same in marketing expenses, but had way more revenue, about a doubling. So that was leading to these really good operating profit margins. And the bad thing is now, the worrying thing is that the marketing expenses are per euro of revenue, they are rising every year. And now in 2023, they were hitting 19 cents per euro. So that's quite a bit. So a little thought experiment, what would happen if the last 3 years didn't happen? It would look like this. It would actually look pretty good, because margins are still operating margins are still improving, gross profit margins are staying the same, and expenses for marketing are also coming down. But that's not what happened. What happened was, of course, this here. Another thing that's different to 2019 is that now the company has long-term debt. Compared with the total amount of assets, it's not too much, but nevertheless, they took on long-term debt. In 2019, they had nothing. And if you have debt on your balance sheet, that means you have to pay interest on that debt. And the line item interest expense didn't exist on the financial statements for 2019. And as we can see here, they have spent 35 million euros in 2023 for interest expense. That's also growing compared to 22. And at the same time, the operating profit is shrinking. And now the interest cover ratio is just shy of four times. So they are earning an operating profit about 4 times the interest expense. That is still okay, but the trend is not really going into the right direction. And that is that in combination with the shrinking margins is my strong guess that this is why the price of the share was going down so much. So, conclusion for myself. Number one, my mistake was that I didn't analyze the stock as thoroughly as I did now. Actually, a friend of mine convinced me to buy it, and I was like, they had the booster from the pandemic and that's over. But he was like giving the argument that people don't know how to cook, so they need this service from HelloFresh with the recipes and the ingredients in just the right amount, so people learn to cook again, and it's far easier to cook yourself with HelloFresh, and that's all well and true. But the effect that the pandemic brought to the business was much bigger than I thought, and that's obviously gone. And it's a big question if they can make positive operating profit in the long run or not. So second thing, what to do. So actually my own position in the stock is really tiny compared to my portfolio. So I will just hold it because it doesn't make a difference. Would I buy the stock? I think it's very volatile. I think when the next quarter shows really good numbers, this can go way up, and if it shows again very depressing numbers, it can go way down. So this is a very volatile stock. If you have a good insight, a better insight than I have into the business of the company, and if you can make a good estimation where the business is going, then by all means go for it. But for myself, I will not buy more. I don't understand the business enough. I also wouldn't want to short it because it's volatile in both directions. So I would just keep holding my shares. So that's it for HelloFresh. Thanks, and I hope you found this useful. Bye.